Excellent. So everybody, welcome to the exciting world of multifamily meetup presented to you by XSITE Capital. My co-hosts today are my co-founders, Leslie Awesome and Tenny. I am Dr. Julius, the CEO and co-founder at XSITE Capital. Also with us today is our team member and executive assistant, Braden Haid, who is also a very integral part of our team. We are super excited to welcome you to this very special edition of our meetup, and super excited to hear from our speaker today, who I am sure is going to share some amazing gems with us. Travis, in my short conversation with him, was very engaging, and I'm from these interviews that I've listened to in the past, I'm sure you guys are in for a great night. Travis Watts is a full-time passive investor who has a lot of experience with investing in real estate. I've been invested since 2009 in multifamily, single family, and vacation rentals. Travis is also the director of investor relations at Ashcroft Capital, and he dedicates his time to educating others like us who are looking to be more hands-off in real estate. Obviously, some of us are active, but certainly a good number of us are also still investing passively because we truly believe in this asset class to grow our wealth in a fantastic fashion. So without further ado, I will pass it on to Travis. Please take it away. Thank you so much, Travis.
Julius, thanks so much for that intro. And I think you hit the nail on the head. What I tried to do with this presentation is accommodate to both the passives and the actives. I think there's going to be something for everyone. And to your point, no matter what we do in life, right, there's only so much time that we have to give. And then, passive investing can definitely help you scale up your passive income streams without having to dedicate more time to it. So that's what we're talking about. I truly appreciate everybody being here, making the time, especially those here live tonight. And this is going to be exciting. Anytime I have the chance to share my passion in this way, I'm always game for that. So if anyone's got other educational groups that you want me to speak to, I'd be happy to do so. So with that, so the topic is achieving financial freedom through passive investing. Highlights and some stories from my own experience, a couple stats and facts and tidbits about what's going on in multifamily 2021 going on 2022, and why I'm so passionate about this asset class. So this is in no way, shape, or form any kind of sales pitch. I got nothing to sell anybody. We're just talking about just some value add education. So to that point, a couple of disclaimers before I start rolling with my presentation. I'm not a financial advisor. I'm not licensed to do so. I'm not a CPA. I'm not an attorney. So please always seek license advice. The intent of this presentation tonight is solely for educational purposes only. We'll do a Q&A at the end, but not giving anybody any advice or strategies on what you should do, but I'm happy to share what I've done and kind of what that looks like. All right, let's see here. There we go. Quick background. I won't spend much time on this, but I'm a full-time multifamily apartment investor. As Julius pointed out, I'm a limited partner. And for those that may not be completely familiar with some of those terms, we're going to dive into that first before we get started. I'm also director of investor relations at Ashcroft Capital. So I work with Joe Fairless, for those that know Joe, and been investing with them a long time. And so I do a lot of their educational events and webinars, podcasts, and just investor relations in general. And my quick, bullet pointed background is that I started like a lot of people start in real estate. I started with single family homes. I'm going to share some stories about that. I invested in condos, townhomes, single family. I did flips. I did all this kind of stuff for about 6 years. And I made a transition to being more of a hands-off passive investor in multifamily apartment syndications. So about 12 years plus, a little more at this point, in real estate in general, as far as professional investing is concerned. And at the end of the day, what's my passion? It's just helping others in real estate. Doesn't matter, that's all encompassing. I talk to people week in, week out. I talk to 17, 18-year-olds just wanting to know more about real estate investing, and they're just getting started with maybe a house hack. And I speak with 70-year-olds looking to do the first syndication. They've never heard the term before, and anybody and everybody in between. So that's a little bit about me. Sorry, my clicker's not working too well here. The agenda I've laid out is to explain real estate private placements, AKA syndications, who invests in private placements, perhaps, who's it best suited for, and a little bit of highlights from my 12-year journey to financial independence, mostly in this asset class today. And why multifamily? Why passive income? Why cash flow? Why the passion for things like this? So I'll share with you a few tidbits, and time permitting, I'm sure we'll have the time, but we'll go into a Q&A at the end. I closed this chat. Maybe that's what's throwing this thing off. Sorry, my clicker's just not working too well. All right. So here's the kind of the legal verbiage about what is a real estate private placement. And then I'll show you some visuals and we'll go into some actual practical examples. So a private placement is the offering of restricted securities to a group of investors. And unlike public offerings, like in the public stock market and Wall Street kind of stuff, private placement issuers can raise capital from investors while relying on certain exemptions from registration under the securities laws that are set by the SEC, the Securities and Exchange Commission. Entities engaging in exempt private placements offerings can be in any industry, including real estate. So that's important too. From a high level, what it is you have your public offerings that are publicly traded in the market, where there's a public market where you can buy in and you can sell out nearly instantly. And then you have the private world where, I could launch a business tomorrow and I could go partner with some investors and I could raise capital that way, but there's no public market for that. I'm not issuing public shares of stock and stuff like that. So all it is buying real estate privately and not buying a REIT or real estate investment trust, for example, in the stock market. All right. So with that, let's look at a practical example with a visual. So let's say we have a 400-unit apartment building, as you see there on the right of your screen. Let's just make up a purchase price here, $60 million for something like that. I think that breaks down to about $150,000 per door. So if I were to go find a deal like that and I wanted to purchase that individually, let's say, well, I've got to come up with about a 25% down payment, sometimes more in some cases, maybe a little bit less, but for this example, I use that number. So I need about $15 million that I have to send to the lender to get a loan to buy the property, just like you would with buying single family home investment property. And then I'm probably going to want to update it. Maybe it needs some new roofs, new paint, the units are outdated, stuff like that. So I need to allocate about $5 million, again, example purposes, to renovate and make this a better community for the residents, and of course, to be profitable to investors or to myself if I was buying this individually. So all in all, about $20 million needs to be raised. Well, as you probably can imagine, a lot of individual folks don't have just $20 million laying around to go make that happen. So hence the real estate syndication, where you have general partners who find these deals, they underwrite these deals, they're raising capital for these deals, they're managing the business plan. They're basically an active investor or an asset manager, if you will. And then you've got limited partners, and this is what I am, and these are the folks investing in the deal. They're bringing their own capital to the deal. They're sharing in the profits with the general partners. These are the hands-off investors. And so that's really, the basis of what we're talking about. Value add is kind of the topic of discussion tonight. That's basically a business strategy. There's different strategies you can do in the space. What we're talking about tonight is buying something, renovating it, and hopefully selling it for a higher price later down the road. These are just a couple visuals of what I mean visually by value add is taking something that looks like what you see on the left there under the before picture, which could be a a 1995, maybe a 2000s built apartment community, and then renovating it to what you see on the right-hand side, adding crown molding, new cabinets, stainless appliances, granite quartz countertops, hardwood floors, light fixtures, sinks, faucets. You get the point. You're just modernizing something into today's standards, like you would with a fix and flip or any kind of other real estate property. Maybe taking just a bland, basic pool area and adding some shaded cabanas and some umbrellas and resurfacing the pool, stuff like that. Taking unused amenities. This one's huge in multifamily. There's so many properties that were built in the 60s, 70s, 80s, and 90s where they've put, a pickleball court or a volleyball court or a basketball court, and it's just not the best use of space in 2021 going on 2022. So you might take that and say, well, let's put a running track around the outside for our residents that are, wanting to exercise. Let's put a dog park in the middle and a green space for folks that have animals, pets, dogs, want to throw the football around. Let's put a kid play area for our residents that have children. Let's put some barbecue areas and picnic benches for people. What we're trying to do is maximize the usable space on the property and make it accommodate to the majority of the residents who live there, thus adding value to them and their community and adding value to the property as this is a modernized and updated amenity space. And this would be a clubhouse example, again, 1990s or whatever on the left and 2021 there on the right. As we all know, first impressions go a long way. And so you're wanting to appeal to someone who walks through the door that might be a potential renter, and you want to give them that wow factor. So that is a value add multifamily apartment business plan visually explained. So who invests in real estate private placements? Well, there's a lot of common types of investors, and I'm telling you from my own experience with networking with a lot of LPs, I'm telling you from years and years working as director of investor relations and talking to literally thousands of investors, I've got to know pretty much who invests in these types. And I'm sure I'm going to leave out some categories, but these are the most common. We've got our medical professionals, a lot of physicians, doctor, dentists, radiologists, surgeons. They're busy on their own practice. They're working their 50, 60, 70 hours a week. They don't have time to be flipping houses on the side and stuff like that. This is a diversification investment strategy for them. Maybe they don't want 100% of their retirement in their 401k or in an IRA or something. So this is a place they can diversify. You've got your corporate professionals. You've got your CEOs, your VPs, presidents of companies, sales reps, engineers, highly paid individuals. You've got other category. I put professional athletes in this category, and
Travis, I think your sound is gone. Travis? I think his Wi-Fi may be problematic because I think his image also is gone. Well, we'll give Travis a few more minutes to get his screen fired back up, but yeah, I think it's gonna. There you go. I think you muted. You muted, Travis.
Sorry about that. Am I still sharing my screen?
No, not yet.
All right, let's do that. Sorry about that. I don't know what happened. Let's go share. Cool.
Worries.
Are we back?
Yeah, we are back. I think.
All right. Sorry, everybody, about that.
You were on the previous screen before.
Oh, gosh. There we go. All right.
Yeah, there you go.
All right. So basically, these are your common types of investors: medical professionals, corporate professionals, and other, which would be, all that to suggest accredited investors. Not everyone has to be accredited, but high net worth, high income individuals, for the most part, is who is investing in these types of deals. People who, quite frankly, should be focused on their highest and best potential, or what they love doing, right? What they're passionate about. It may not make sense for someone, like a lawyer who's making $300 an hour to go fix and flip a home and make $40 an hour, just to use some simple math. I know I did some flips back in the day that kind of netted that kind of result, but hey, I wasn't very good at flipping homes, which I'll talk about here in a minute. So that's kind of that. My favorite saying, yes, this is my own quote, which is kind of goofy, but passive income allows you to spend less time on the things you don't like doing and more time on the things you love. To me, that's kind of the basis of why you might consider investments that yield passive income or yield cash flow. Warren Buffett, if you don't find a way to make money while you sleep, then you'll work until you die. Such a morbid guy. Look at that guy. Look at that. Look at the look that he's giving you. So morbid. But, it's got some truth to it, right? I mean, you got to, at some point, like I alluded to, and Julius, you alluded to at the very beginning here, whether you're active or passive, it may not hurt to have some actual passive income working for you anyway, on the side, right? And if you're ever wanting to actually retire and free up your time, that's how you're going to do it. The key is while you sleep. That is the key right there. It's not dependent on you showing up Monday through Friday and putting in the hours physically or mentally. So I thought this was interesting. I just kind of threw this in here as a random slide at the last second, but I just found out, Shaq, he started flipping houses at age 26, which was a few years after I was doing that, or kind of in the general time frame. But he recently opened an $80 million apartment community. And I keep that in mind as we go through this next section, and I share some highlights from my journey. And I'm going to circle back to this here in a minute. But interesting that he started, like a lot of folks do, with single family, ended up in multifamily. Why might that be? So here's some highlights of 12 years of just being in real estate, about half of that active single family and half of that passive multifamily. So I'm going to talk about some advantages of not being a landlord, but rather being an investor, and why invest for passive income. I know I already alluded to that a little bit, but I want to go in more detail. And then why leverage other people's expertise, why that's important. By the way, that image there on the right is a goofy picture of me when I was like 19 or 20 buying my first property. And I dug that up the other day. So this was kind of, not all inclusive, but just a few of the homes that I started with out in Colorado, buying and renting, house hacking, having roommates. I did all kinds of strategies and vacation rentals and all that kind of stuff. But, I went through year after year, pivoting and trying to learn new things, trying to do it all myself. It took a ton of time, you guys. And by the way, I was working almost 100 hours a week at a W-2 job during this time, literally 14 hours a day, 7 days a week. That's about 98 hours per week. And then I was trying to do all this on the side, so it probably wasn't the best suited strategy for me, but anyway, that's what I was doing. This was the reality of what was actually happening behind the scenes. That's me falling through drywall, not literally, but stuff like this, the wrong size faucets, things that, trying to do it myself, sinks falling out all over the place, always scrambling because one of my tenants had a sprinkler head broke or this, that, or the other. And, not really knowing what I was doing and trying to learn on the fly. So I made a ton of mistakes, you guys, a ton. And I'm not a handyman. This was not my skill set. So I don't know who I was trying to fool by thinking I was a house flipper. But I went through the motions, and the market kind of saved me a lot of the time just because it was going up from 2012 to 2015 mostly. So by 2015, man, I was done. I was out. I was so fed up. I was so frustrated. I was so angry at myself mostly. And I thought, there has to be a better approach to this. I love real estate. I love the tax advantages. I love passive income. I love all this stuff. But man, do I hate managing tenants, toilets, and termites, So what happened was, that was my head right there, by the way. That was my actual brain, a snapshot of that in 2015. And so now you know why Shaq was like, hey, man, I'm done flipping houses. I'm going to go into multifamily. So I'm not speaking on his behalf. I'm sure he's got, other reasons, but it's much more scalable. We're going to talk about some reasons why multifamily here in a minute. But the fact is, if anyone on this call or anybody has been doing it themselves year over year over year over year, you're going to burn out. You're going to burn out eventually. You're going to have, turnkey properties, property management. You're going to try, like I did, to get passive, but it just never really is passive. Even if you don't manage the tenants and you have a great property management company, which I did have at the tail end of all that, I still had to make active decisions all the time, right? Do you want to repair your roof or replace it? Your hot water tank's 7 years old. What do you want to do with it? Hey, a tenant put a hole in your wall. How do you want to, remedy that? Do you want this company, that company? Do you want to, self-fix it? What do you want? So there's still a lot of active components, even trying to outsource a lot of that. So bottom line, it was time for change. It truly was time for change for me. So this is where leverage other people's expertise really came into play. It's Joe Fairless there on the right. That's Frank Rossler there on the left. They're the co-founders of Ashcroft. I just threw them in for example purposes because I had a picture of it. But I've got pictures of me with many other operators like this. And I hyperimposed the LP and GP there. The fact is, I said, look, I like what you guys are doing. You've got the track record, the experience, you're professionals. You're really focused on this stuff day in and day out, year in and year out. I can't dedicate that much time and effort into, you can't beat them, join them, was kind of my philosophy at this point. So I became a limited partner and said, why not have me share in your success? Because you clearly know what you're doing and I clearly don't. And so that was the biggest game changer, in my investing career right there. Sorry about this clicker, you guys. I don't know what's going on. So I started thinking bigger. I started thinking about multifamily instead of single family. I started investing in properties like you see there on the screen. That's just a few. And really, it was about being a hands-off investor. That was the mental shift that I went through in the dynamic. And I always say, it's not about money. It's about having choices. Okay, this is not a get-rich-quick thing. This is not, who wants to be a billionaire kind of crap. This is about having choices. And what I mean is, as my wife and I earlier this year out in Mexico, we love to travel. We're international travelers. That's just one of our passion points. And so to us, being a passive investor has allowed us to travel where I couldn't have before, where I was tied down to all the local obligations and things like that. So it's truly, and we're getting to the point of talking about financial independence and financial freedom. And for some people, it's just about retirement. Gosh, guys, going on 2022 and this year, think about it. Where are you finding yield? You can't put your money in the bank anymore and get any kind of return. You can hardly get a return out of bonds or CDs or blue chip stock dividends or, annuities, all these things that the old financial advice would suggest, just throw your money in the bank and, clip an 8% coupon and retire. That's not reality anymore. So this is my dad, by the way, this is out in Miami or Florida Keys, I can't remember. And we took a big road trip, and that road trip meant so much to me, and I want to talk about that for a minute, and it meant so much to him too, because growing up, my parents split when I was 5, and I didn't get to see my dad too often, and I remember him struggling with the decision to retire and whether or not he could or he couldn't, and for similar reasons to what I'm sharing with you. Where do you find the yield, right? He's trying to run the numbers, which I'll show you in a minute, some numbers, and he's like, man, just the numbers don't make sense. He's kind of thinking, do I have to work till the day I die? He worked for the post office, by the way, 32 years. And so I helped him in regard to real estate, understand private placement investing and understand how to be a hands-off investor, because the last thing he wanted to do is be managing a bunch of tenants, toilets, and termites, quite frankly. So this was just a beautiful moment where we got to take a trip together, and it just meant so much to me that was able to happen. So again, it was about choices. It was not about money. Just another example of that. And here's some more examples of financial independence and what it means to me. It's the ability to do what you want, when you want, as much as you want with your time. This is something I call sometimes time freedom. And as you take a look at these images, some people want to volunteer their time more. They want to be more charitable or spend more time in their church or community. Some people just need some rest, some peace of mind, time to themselves to meditate and self-reflect, whatever. Some people love to travel, like my wife and I on the lower left, and some people just want to spend time with kids or grandkids. So we all have, what would you do if money was no objective? What would you do if you had, $50,000 a month and passive income rolling in your bank account? I'm only using that for example purposes, but what would you do? That's worth some thought and some consideration as you jot down your goals and you move forward with investing. So why passive income? Why cash flow? Why real estate, right? So when your passive income exceeds your lifestyle expenses, that's your rent and your mortgage and your food and your travel and all the things that we all pay for, you are financially independent. This is kind of my definition anyway. So I take an example goal and I say, all right, so I'm Joe Schmo here, and I say I want $100,000 a year in passive income. That's going to allow me to retire or to move to part-time work instead of full-time. well, then I would need 1.25 million invested with about an 8% annual cash flow or passive income amount to give me 100,000 per year. So why 8%? I'm not suggesting that's the end all be all or that, that's some kind of, I don't know, guarantee or promise. It's certainly not. It's for example purposes only. But, here's a chart I made for you. How much do you need to receive 100,000 a year from cash flow? Well, check it out. You want to go buy, bonds and CDs and annuities and stuff like that, and you're clipping 2% a year. Well, you need like $5 million then to be invested at 2% a year to get the same outcome. Or you say, hey, 8%, that's low. I could do 10 if I did my own deals or vacation rentals or whatever it may be. Well, then maybe you only need $1 million invested, to get yourself the 10% annualized return. This is just something as a visual, feel free to screenshot, that if it's helpful to you, but it's just something to think about as to what investment vehicles are going to get you to your goals. And we're all different. I'm not saying that multifamily's, again, the end all be all or that it's even right for you, but for me, it made a lot of sense. And, I live on cash flow. So this is powerful stuff. All right. So more about why invest for cash flow. So check this out. Raise your hand. I can't see you, but raise your hand anyway. Just play along. If you've heard investing is simple, right? Buy low, sell high. That's investing. It's investing 101, right? It's what most of us have been taught either through school or thank you for raising your hand virtually. This is what I was always told, right? And this is this idea, this is kind of what America and a lot of the world has created, this concept of, hey, throw your money, give your money to Wall Street, right? Go throw it in a 401k, an IRA, a brokerage account, whatever, right? And just hopefully one day, we got some interference.
We'll see you soon. Craig, please mute.
Anyway, but yeah, this concept that you go throw your money into these accounts, give it over to Wall Street, and that one day you peek at that account when you're 60 or 70 or 80 and you go, hey, it's higher than what I put in. And so then hopefully I can retire. That's putting an awful lot of faith, trust, and hope into something that's very critical. So who remembers or who knows about the lost decade? This is a prime example of someone who primarily just bought the S&P 500 index and thought, hey, I'm diversified and I'm throwing all my money in my 401k. And for those that invested heavily in January of 2000, this is what a decade looked like on your portfolio. You immediately started losing money, then you lost a little more, and then we had, September 11, the dot-com bust, things trickled down, and then you thought, oh, it's bad, but it'll get better, right? We always have a recovery. So here comes the recovery, and you trickle up, and just when you got your money back, oh, the Great Recession, your accounts plummet back down again, and but we always have a recovery, right? Oh, invest for the long term, right? And so then it trickles back up. But the fact is, you guys, that a lot of these index funds, a lot of blue chip stocks hardly give a dividend anymore. And so this was not a cash flow strategy. This was a buy low, sell high mentality of investing. And the reality was you didn't make any money for a decade and you got eaten up by inflation. That's really what happened there. So let's say in the same time frame, you had said, instead, I'm going to invest for cash flow. I'm going to buy or invest in a multifamily apartment community from 2000 to 2009. Same economics, right? The same economy, same time frame. And let's say conservatively, you put $100,000 into some, multifamily syndication, you had a 10-year time horizon, and you were just able to clip 6% a year in cash flow or passive income. It never went up, not $1. And that's a very conservative approach. If anyone knows the statistics of kind of multifamily and yield from those years in multifamily, it probably would have been, triple that. But hey, we're going conservative for example purposes. So that's $6,000 a year you would have been pocketing, for example purposes, over 10 years, so times it by 10 years, that's $60,000 you would have put in your pocket in a very heavily tax-advantaged way. And so, regardless of price fluctuations in the market, regardless of the stock market, regardless of anything, cash flow was king, right? You didn't have a decade of zero. You had a decade of at least 60K, not to mention any potential equity upside on deals like that. And so usually these deals turn over, by the way, in half that time frame, 3 to 5 years, depending on the operator. So you could have put your money to work, increased it, got out, put it in more deals, got out again. I mean, I'm just saying, it's pretty phenomenal. I don't know how that sits with you, just looking at that example and thinking about it, but cash flow to me it's something real. It's something tangible. I just don't have to wait around. And I've bought plenty of stocks and REITs and things, and it's great when the stock market's up, and boy, does it suck when the stock market's down, to know that you waited 4 years and that you're underwater right now and you haven't made any money. So if the renter pays the rent, I don't care if we're talking about single family, multifamily, I don't care, real estate in general, the price of the real estate is secondary. That's my opinion. Agree or disagree? All right, reasons to consider multifamily in 2021/2022. A lot of people invest in this asset class because of monthly passive income. We already talked about it. Where are you finding the yield today? It's very hard. It's very competitive, but multifamily still got a pretty strong yield when you take a look at 10-year treasuries, when you take a look at bonds, when you take a look at bank yield, all that kind of stuff. It's still far supersedes those numbers. Tax advantages. I already mentioned I'm not a CPA or tax advisor, but I tell you guys, I never got into real estate because of the taxes, but I will stay in real estate because of the taxes. It's just phenomenal. The more you get educated on the topic, the more you realize this is a phenomenal asset class tax-wise. It's an inflation-resistant asset class. I never like using the word proof. I don't think anything's proof, but inflation resistant. As the price of lumber skyrockets like we've seen this year, as wages increase, okay, supply chain issues, as inflation happens, it's raising the price of real estate, both new and pre-existing. So it's inflation resistant. Diversification. You can invest geographically, different asset types, different tenants. Something I love, I don't know if you guys listen to the Real Estate Guys radio show, but I'm a big fan. Robert Helms, Russell Gray. Years ago, I was listening to an episode, and Robert Helms says, live where you want to live, but invest where the numbers make sense. And so, this is a problem for a lot of people. They live in New York City, they live in LA, they live in San Fran. Good luck finding, solid cash flowing properties is pretty tough in markets like that. And who knows about the appreciation. So maybe you live there and you love living there, and that's fine and great. Maybe, Florida, Texas, Georgia is better market for you. Just saying, maybe it is. You got to look at migration trends. So you don't have to manage tenants. I already shared my story, but man, I could make an hour-long talk about just managing tenants and the difficulties that I had with that. It was insane. And lower volatility compared to the stock market. Back in March of 2020, as we all were around for, the stock market was down, 30%? Some stocks like REITs were down 40, 50%. That's insane because the underlying portfolio in most cases wasn't that affected, as we all found out. And of course, there was the recovery curve and whatnot, but all of my private real estate during that exact period of time continued performing and cash flowing and giving distributions. And again, the price was secondary anyway. We weren't selling the assets during that time. I didn't have to look at a loss. I didn't have to think about a loss. I didn't have to take a loss. So I don't know. That's just something that never sat well with me, is the volatility you have to deal with when you're buying or investing in publicly traded stuff. Baby boomers, millennials are renting at record numbers. That's just a general statement, but I think we all know that. A lot of people are choosing to rent by lifestyle preference. A lot of baby boomers are downsizing, wanting more of a turnkey kind of living situation, not having to maintenance the yard or go through another '08 recession. Just, pay the rent every month. Very simple setup. A lot of millennials are living, downtown quarters like my wife and I have, luxury places with pools and gyms. And you get a lot of cool stuff in apartments sometimes, and there's a lot of advantages to it. There's a shortage of safe, affordable workforce housing nationwide. That's been the case for 15, 20 years now. We're just not building enough. And the Great Recession set that back further, and COVID has set that back further. And so it's a big deal, you guys. I mean, we're still so far behind. There's a lot of buying demand from Wall Street and Main Street buyers. Main Street meaning you and I, just individual people, buyers, and then Wall Street, like, Blackstone and REITs and mutual funds, things like that. So it's, it's easier, in my opinion, to offload a 200 to a 600 unit apartment building than it is even sometimes a single family home or a duplex or something like that. There's just a lot of buying demand. And the ability to leverage others' expertise. I don't know about you guys. Maybe you're like way handier than me and way more skilled and have way more connections. I just really suffered through the process of doing single family all myself and trying to self-manage and figure out, repair jobs. And even when I was using contractors, it was really tough. I just had a tough time. So something to think about. This is a very scalable asset class. This is something where if I have one LP investment or I have 100, it's still not requiring my day-to-day time to do anything about the properties. No tenants and no making any decisions. I'm just a passive investor. And so that's very scalable, as is the property itself. Think about it. If you own a single family home and you have to go buy a fire extinguisher, we're probably going to run down a Home Depot, Lowe's, Amazon. You're going to pay 30, 40, 50 bucks for a fire extinguisher. Imagine ordering 5,000 fire extinguishers in one order because you own portfolios of multifamily, right? There's going to be discounts and efficiencies built into that. One loan, 200 plus units. That's a beautiful thing. Again, when I got to property 5, 6, 7, banks started going, guess what? You've got an awful lot of debt on your books, and I don't think we're going to give you any more loans. There's ways around it. It's very difficult. Not to use your own credit or debt to income ratio is the bottom line when you do syndication investing. So Robert Kiyosaki, founder of the Rich Dad Company, author of Rich Dad Poor Dad and the whole series of books, Cash Flow Quadrant, on and on, says real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. I mean, pretty basic statement, but hey, this guy's made so much money in real estate, and I couldn't agree more with that. My saying is that a year from now, you'll wish you'd started today. I think everyone pretty much feels that way that's been in multifamily or real estate ever, but it's a pretty true statement. So with that, you guys, I hope you found some value in it. I'm happy to do a Q&A. I didn't put it on here. That's my personal cell, by the way, if anyone wants to reach out or text. There's my email, Travis@Ashcroft Capital. I'm on LinkedIn, Instagram, YouTube, Facebook. I run the Actively Passive show, part of Joe Fairless's podcast. I'm on Bigger Pockets. So reach out on the medium that suits you best. But I will give you this link really quick, and I'm sorry it's not on here. It's ashcroftcapital.com/Travis. And I've got my calendar on there. If you want to click on there, I do absolutely zero sales pitch calls with everybody like I described before, 17, 18-year-olds, accredited, non-accredited. I'm just wanting to help people and be a resource for people to understand what they can or can't do or how things work. So reach out if you have any questions that you want to do one-on-one and not right here on an open forum Q&A, but happy to field any questions that you guys may have here. How are we doing on time? We are almost perfect, about 45 minutes. So
you're doing quite fantastic, Travis. And from the feedback we're getting in the chat, people are saying that you've completely given them so much to work with. And everybody's saying thank you to you. So we really appreciate the incredible value that you've shared with our community. For anybody that has questions, please start to drop them right into the chat, and we will make sure that you all get the recording of this meetup in a couple of days. If there are no questions yet in the chat, I could get started with Travis with it. Oh, look at that. Christian came in with a question. So Christian asks, how do you go about finding limited partners?
Right. So is the question, how do I go about finding general partners, meaning people to partner with?
I guess Christian is saying, yep, general partners.
Okay, cool. Yeah, makes sense. Great question. I've recorded a few different episodes on the Actively Passive show where I go in about 45 minutes of detail on how exactly I do it. Check that out on YouTube. But aside from that, shameless plug. Basically, it's like this, Christian. I first start with my goal and my intentions here. What is it I'm doing? What is the long-term, objective that I'm trying to reach? And we're all different right there, okay? Well, for me, it has a lot to do with cash flow streams in a diversified manner so that my wife and I and family can do the things that we want to do. I won't go into too many details. So from there, I realized that, okay, I need to find an asset class that has a cash flow component primarily, and ideally some equity upside. And, the icing on the cake is kind of the tax advantages. So what fits that mold? Syndications, right? At least in my opinion. Then I go and I say, what markets do I like? How do I know that? Well, I look at migration trends. People are moving out of New York, New Jersey, down to the Carolinas and Georgia and Florida, and people are leaving California in droves and going to Texas and Nevada and Arizona. So this is how I kind of start identifying areas that maybe I want to park some capital in for the next 3 to 5 years. Tax-friendly states, landlord-friendly areas, diversified employment where other employers are going. So I'm kind of vetting that process out too. Now I'm getting to your question, but I'm not there yet. So it starts with my goal, then it starts with the markets and what it is I should be investing in. Then we get to the operators, and I'm just looking to find operators that are doing just that. They're doing a value add monthly distribution, cash flow focus kind of apartment deal for 200 to 600 units. I'm just making this stuff, it's like criteria. Everyone's going to be different there. And usually, to get to the point of your question, it comes from word of mouth references, people in my networks, groups like this that you're on tonight. I can't tell you how many operators I've partnered with just solely off presentations and Q&A stuff like this, and then a few follow-ups, and then just making a decision. Yep, that makes a lot of sense. I like what that person had to say. I feel like they're transparent and honest. They got a track record, all that kind of stuff. And then that's usually who I do deals with. And quite frankly, I usually go in with like a minimum investment and I test the group out because I can't be right 100% of the time. Sometimes I make a deal or an investment I wish maybe I hadn't with a group that, for whatever reason, it wasn't a group I probably should have partnered with. But that's why I do the minimum, right? But for the groups that, under promise and over deliver and, achieve the expectations or greater that I like working with, that are very great at communication, I'll end up doing more deals with them. So it was a very long-winded answer, but those are some bullet points from a high level, but check out the episode for some more on that.
That was a great answer. Dr. Bobby Indu, my very dear friend, asked, how do you improve the deal flow that comes across your desk?
Great question. Knowing your criteria, I can't stress enough. And how do you know your criteria? Well, some of the stuff I just talked about, you could get books like, The Hands-Off Investor, or Joe Fairless wrote the Best Ever Apartment Syndication book. There's so many great books out there. I think, what's his name? Brandon Turner at Bigger Pockets. He just wrote a multifamily book. Haven't read it, can't endorse that one. I don't know. But the point is, listen to podcasts, attend meetups, and understand what your criteria is. And then you go seeking operators that are doing those deals. Google searches, there's websites that are in the works right now of being created, kind of like I would describe them like the Yelp of finding investments, meaning that they're going to list a whole bunch of operators and people review them. These are not finished out, completed, one-stop shops at this point, but they're great concepts because the true answer, unfortunately, is there is no one answer. It's everybody's different. And I started through Bigger Pockets, forums, meeting people at conferences, attending local meetup groups and networking. And I just kept expanding. And as I found an operator, like, Ashcroft Capital's one, but I've partnered with, 14, 15 different operators at this point. And, I asked them, who else is kind of doing deals like you guys? Like, obviously, I'm an investor with you, whatnot. I like what you're up to. And I know it's kind of a competition question, but is there any other groups that you know about doing similar stuff? I've got to tell you guys, 90% of the time, I get an answer. I get an answer of one or two other groups that either they've partnered with themselves as an LP or that are just doing similar stuff. And I just keep networking and networking. And then what's going to happen a year or two later is you're going to find you have way too many deals to look at compared to how much money you have to deploy. More than likely. I can't say that for sure in your case, but in my case, that's the case. And so at this point, it's like eliminating groups. It's unsubscribing from groups that, maybe they started as multifamily value add. Now they're doing new development and, I don't know, house flipping portfolios. I don't know. And so I'll unsubscribe from them and double down on the groups that continue to do what it is that meets my goals and my objectives.
That's a fantastic answer. Thank you so much, Travis. Edward Drace, who actually is invested in over 21, actually around 21 multifamily deals, asked this question: would you recommend that people invest with the best lead, I'm guessing lead sponsor, or the best property? Bet on the jockey or bet on the horse?
That's a great question, Ed. Here's my take on it, just my personal take. 3 areas of risk, generally speaking, okay? You have the operator, the general partnership, the firm, whatever you want to call it. They're all interchangeable names. You have the market, and then you have the deal, okay? So my opinion is 50% of the emphasis goes to the operator themselves, how competent they are, what their track record is, how well they align with your goals, philosophy, communication, reporting. All the above is 50% of the equation. Then 25% to the market, 25% to the deal. And I'm only sharing that out of personal experience where I have invested in a really awesome deal at a really great price point in a really awesome market, and the operator just fell on their face, and our returns were less than half of what was projected because they quite frankly just couldn't pull off the business plan. So what use is anything else if you're working with a bad operator? And I'm thankful it turned out the way it did. It taught me a lot of lessons. I didn't lose money, thankfully. But this is how people can lose money, is partnering with a bad operator. If you're working with a very experienced operator that knows their market, knows what they're talking about, has done this over and over, do you really think they're going to do a really crappy deal? Probably not. It's probably going to be out of their control, so to speak. If something really goes south, it's going to be like a hurricane hit the property and the insurance, screwed them out of something. And, it's not really going to be on their shoulders. That's my opinion.
Awesome. Thank you so much, Travis. Jade asked, what do you think about small multifamily investments in Toronto, Canada? I'm not sure if you have any insight into that.
Well, I know cap rates are super compressed in Toronto. I know it's very expensive there. My opinion in general with small multifamily, as in duplex and triplex and quads and 8 units and things like that, is that it's a lot of parallels to single family investing. So a lot of the stuff that I shared about, there's nothing wrong with doing it. You'll get a great learning experience. You'll build a great foundation out of it. It's a very active role to take on. In today's kind of environment, I think you're taking a little more risk than, say, what I was back in 2012 and 13 and 14 when things were just booming. I mean, not that they're not booming now, but I mean, I don't know. It just seems riskier to do today. So I guess the question that you should ask yourself is, does that align with what you're trying to accomplish? Are you trying to accomplish, I want to learn hands-on investing because I want to go be a general partner and raise money from others and do bigger deals, and I want to learn the game? That would be one perspective. My perspective would be, I don't want to take the time, energy, or effort to do it when someone else is doing it great and I could just go partner with them. So it's just a difference in opinion. So you do you. I don't know your market too well, but I would look at it from that high level.
Awesome. Becky Wong Kaplan asked, as an LP, I know you want to vet the sponsor. So if you are doing investor relations, do potential investors ask for background checks on the sponsors, and do sponsors allow that?
Yeah, absolutely. Well, I can't speak for every sponsor. I'm sure there's a few out there that would say, no, but, I know a lot of sponsors will be open to that. There's a few different sources, I would say, that are pretty reputable that you could go through for a background check. I usually do my due diligence more through, I know 10 or 15 people, just for example purposes, that are investing actively with this group and have been for many, many years. And I'm kind of, I'm not telling you what to do or saying that's the right approach, but I do that versus a background check. Because think about this. I think about this a lot. Think about someone like Bernie Madoff back when, right, in the recession. You could have background the heck out of that guy, you know what I mean? And you would come up with nothing. That guy never did anything wrong, right? Nothing on record. And then all of a sudden he's like the world's largest Ponzi scheme, So a background check can be good. But here's the thing, in 2021, with all the forums and outlets and bigger pockets and Google searches and reviews and Better Business Bureau and all this stuff, if there's a bad operator out there, they're probably already out of business. And if they're not, they're on their way there, and you're going to uncover a few things naturally just through some searches and figure out that may not be the best group, or you're going to talk around to some people at meetups and conferences, and they're going to kind of hopefully shy you away from a group like that. So again, it's one of those questions where there's not an exact right answer. There's not the end all be all, but yes, they should be, in my opinion, every operator should be open to an investor saying, give me a handful of references, or can I run a background check on you, either the entity or the individual, and they should be open to that. That's my opinion, but that's not a law or rule. So someone could turn you down.
Fantastic. Thank you. And John Rock wants to know what your thoughts are on Grant Cardone.
Grant Cardone, great marketer, great sales guy, man. Been great at sales for a long time, a lot of psychology in that. So Cardone Capital is a group like Ashcroft or Praxis or probably, XSITE. They're a multifamily syndication group doing, multifamily deals. They're buying more luxury and high-end stuff, more of the A class and, kind of paying the premium prices and whatnot. I don't know everything about their fee structures and whatnot, so I don't want to say too much. I personally have not invested with them, very aware of who it is. Grateful that he's brought so much exposure to this scene to make people aware that this is an investment opportunity. What it's going to come down to is what's right for you and your goals, right? Again, I don't know their details of like their minimums and do they do monthly distributions and what's their fee split. I don't know that stuff. So if you learn all of that and you think that makes a ton of sense, and I think that's fantastic, that may be a group to consider for you. But I that's all I can really say about them.
Yeah, I appreciate that, Travis. You will be a great politician someday. Tech Chang asks, Travis, are you only investing in multifamily? How about investing as an LP into MHP or storage or other commercial deals?
My philosophy is a great question, by the way, is that I believe in investing 80% of your portfolio in what you know and understand best, because you have the highest probability of succeeding that way. And it's just going to help you get to your goals and all that kind of stuff. And then allocating, what I do is I allocate about 20% of my investable assets into what I call experimental. And to answer your question, I am in self-storage, I am in mobile home parks, I'm in ATM machines, I'm in note lending, I'm in publicly traded REITs, I'm in a lot of different things that produce monthly passive income. Is kind of the name of my game. So yes, I diversify, but I also want to put a heavy emphasis on what I think has the best probability of succeeding. So the one time I lost a lot of money is I went really heavy on a non-real estate private equity deal that I knew very little about, and it went to crap and I lost a ton of money. So again, everything I share with you guys is not just, someone else's theory or philosophy. This is just personal experience. So you can agree or disagree, but that's what happened to me.
Awesome. JG was asking, do you have any multifamily investments in your portfolio in Canada? I think it's a yes or no question.
That's a no. I don't.
Okay. Great. Well, I think we're coming up on time. Travis, you have shared such a great, look at this. I think we have the last question here. Charlie Fay is asking, if someone has 100K to invest in the US market, what US state would you recommend?
Oh man, can't give you any advice, unfortunately, but I can say this though, the markets, again, I briefly alluded to this a little bit earlier when I was talking about markets, but I look for migration trends. I look at where people are leaving, where people are going, what the reasons are for that. Got a lot of baby boomers retiring, a lot of people looking for more affordable living, better climates. I look for landlord friendly states and stuff like this. And so I've been parking a lot of capital, personally speaking, in Florida, in Texas, in Georgia, in the Carolinas, and in Arizona. But that's not to suggest that you should, but that's what I've been doing because I see a lot of reasons for that. But you got to do your own due diligence. And it's not to say that, let's say you lived in some, I don't know, Detroit, Michigan. I don't know. If you live there and you know that market and you grew up there and you know everything about it, maybe you've got an upper hand way more than I do about that market. And maybe that's the right market for you. Does that make sense? So for me, I just go with kind of the national stats and movement. I read all these reports from CBRE and Marcus and Millichap and all these, brokers and multifamily sources. And that's the conclusion I've come to.
Fantastic. I think with that, we're right up on time. There may be still some questions. If you do have questions, please, Travis's information is right on the screen. His number is his cell phone number is 954-342-6154. And his email address is right there. All his media information is social media information is right on the screen also. So please feel free to contact Travis directly if you have any additional questions. But Travis, we just want to say thank you. You've been a blessing to our community, and this has been amazing. You've shared some incredible insights with us, shared some great gems with us. We know this is not going to be the last time we're going to see you on this platform. We certainly look forward to interfacing with you and maybe even collaborating with you in the near future. So Travis, once again, on behalf of XSITE Capital and this community of investors, thank you so much. Really appreciate you.
Thank you, Julius. Thank you, everybody, seriously, for attending tonight. I really appreciate it. Talk to you later.
And before you leave, everybody, we still actually, if you want to stick around, we still have some time to just network a little bit. And prior to networking, I am just going to quickly share my screen. Braden, can you please make me co-host so that I can share my screen, please?
You got it.
Fantastic. So let's see what I can do here. There we go. So thank you everybody for coming. I'm glad to tell you that XSITE Capital is actually in the final stages of negotiating a purchase sale agreement for a property in Columbia, South Carolina. 113 units, very close to another property that we recently bought in April 2021. And we are looking forward to bringing this to our community of investors. And so just in case you are interested, we will put a link in the chat. We are not at liberty yet to share with you the name of the property. But if you are interested in knowing a little bit about this property, learning a little bit more about it, this could be your start to gain some deal flow across your desk, per some of those questions that came up in the chat earlier. And feel free to check it out. If it fits with your portfolio, we'll be more than happy to talk to you and welcome you formally to be part of our ownership group for this particular property. So that particular link is just a link to self-reserve, just to mark yourself as interested in the deal so that you can get more information about the deal when we formally sign the purchase sale agreement, which is, for those people that don't know what that is, that's how we put these deals on the contract. Having said that, I'm going to unshare my screen, and then we could get into the networking phase of this. And this is a 506c accredited investors only. That's very correct. Yeah, Becky, you're right. So if you can come on the screen, come on the video, it'll be fantastic, because then the folks on video are going to be the first people that I'm going to let introduce themselves and tell us a little bit about what they do and share what they've been doing in real estate so far. It would be nice to see your beautiful faces. I think Edward is the first one I have on my screen here. So Edward, do you want to go ahead and introduce yourself there? And maybe share some of your experiences with us. I think Edward is probably finishing up a deal right now or something. It's kind of talking. So Johannes, can you please talk to us then while Edward is still talking?
Absolutely. Good evening, everyone. Great seeing everyone. I'm Johannes Urpalainen. I'm a professor at Johns Hopkins, and I'm I've been passive investing for about 2-3 years now, mostly multifamily, some self-storage, industrial. Recently got into mobile home parks as well. So I'm kind of doing a bit different from what Travis is telling you all to do. I'm a big believer in diversification. I've also recently gone active. I work with a tech company that does 3D printing homes for build to rent. So if anybody wants to see the future of real estate, do get in touch. I'm very interested in looking at code GP opportunities and watching Julius and Leslie and others. It's very inspiring, and I want to get into these things. Great seeing everyone.
That is fantastic. Johannes is the man. He is very understated, but that is an incredible professor at Johns Hopkins who is also just like me, as a lot of other entrepreneurial interest outside of what we do on a daily basis. That's fantastic. Thanks, Johannes. Edward, are you able to share some of your experiences with us and introduce yourself a little bit?
Yes, I am. I'm sorry, I wasn't paying attention there for a second, but I had a call come in for a deal. So
I figured you were closing the deal. I guess it's just as much.
Your webinar has been great luck because I've had 2 or 3 people call in about deals. You brought me a lot of good luck, a lot of good fortune. So
that's beautiful.
So yeah, I'm involved in when I first got started, I was taking a look at the single family and so forth, and I got involved in that, and I said, well, single family is while it's a good way to build up cash quickly, right, and so forth, but I just started looking at the the returns from the multifamily and so forth. So what I did is I was lucky enough that over my career I was a good saver and I had a cash built up, a lot of cash reserves. So I went right into multifamily, and I started primarily in Texas. And I was living in Austin at the time, and I built up a bunch of properties along the I-35 corridor, right? So Houston, San Antonio, Austin, and Dallas. There's probably about 4 each of the properties in my portfolio in each of those cities. I also have properties in Atlanta. That one is going for sale. I just had a very exciting deal close in Phoenix. This kind of takes us back to what Travis was talking about, the golden years were the 2010 to 2013 timeframe, where you just hear about people making 200 and 300%, right? Well, I just had a deal where I got 215% return, right? So I'll be getting 315%, including my capital back.
Wow.
So yeah, I mean, that's this incredible. Is where you, yeah.
Was that a development deal or like
I don't do the D word. I had too many of my mentors recommend me don't do the D word. So got it. So we haven't done that. No, it was a property in Phoenix, and it was a small property. It was only like maybe a 56 unit, and it was the folks I invested with, they're Google executives, and it was their very first property that they had invested in. They just hit a home run. Now think about this, because the folks that I know that have been in this longer than me, when they get 300% return, what you're talking about is you invest in one property, you sell it, and now all of a sudden you turn around and you're invested in 3 properties.
Absolutely.
I mean, this is just, it's just huge to have something like this happen.
That's amazing. So pretty much 3x equity multiple is what you're saying.
Really a 2x, right? Because I always, this is one thing that always gets me upset is tell me what my return on investment is. Don't tell me you're giving me my old money back.
Got it.
Right. So the real return is the 215%, but now I have 315% to go out and invest, right? Because I get my capital. Got it. That's one that, because I don't like when leads do that. Or you don't call them leads, you call them, what is it, Julie?
General partners or lead general partners. Yeah, it's fine. You could call them leads too, or sponsors, lead sponsors.
Lead sponsors. So yeah, it's like, tell me what my return is. Don't tell me you're giving me my own money back.
Yeah, well, duly noted for subsequent deals. Yeah, so right on here, I think I have Leslie. You want to go? I mean, Leslie, yeah, why not? You're one of the co-hosts, but why not? People should know who the co-host is.
All right, I'll keep it real brief. I'm Leslie Awasum, co-founder of XSITE Capital and co-host of this meetup. I'm just going to say thank you to everyone that keeps joining every month as we host these events. It means a lot to us because Part of our founding value of XSITE Capital was the need to bring this value to our community, to bring this education to members of our community, and to share the knowledge of multifamily investing to as many people as possible. So it means a lot to us that you keep joining us. We truly appreciate you, and reach out to any one of us if you have any questions about anything. We're more than happy to help.
Absolutely. Braden?
Hey everyone, I'm relatively new to this space. I love the work that XSITE's doing, and I really appreciate these meetups because I get to learn from, so many different people in the space, and it's great to see all of your faces and answer the questions that you have, and just continue growing our minds together. It's really great.
That's fantastic. You mean the work that you've been doing?
Yeah. Yes.
You're the engine.
I'm learning from masters and trying to become one myself. Put it that way.
Fantastic. Awesome. Becky?
Hey there. Hi there. I am, I would say I'm like the principal of Longitude Capital. So my husband and I started this company together. By my background, I'm a pharmacist. My husband is a radiologist. And we are originally from California, and we were just working our W-2, working our jobs. And then we were struggling with the life imbalance, all work and, not enough time. And I was pregnant with my second child, and I really wanted to go back and not work full time. And the struggle, like, do I go back part-time and things like that? Anyway, my husband's job was shrinking. And by that time we got into real estate just because we had a couple of rentals in California, and they weren't cash flowing. I mean, there's these houses, or one's in Oakland, California, but even though the rent is being paid, it's not cash flowing. But, eventually we decided, okay, his job is changing because he was licensed in Washington. This is where we are now. We said, okay, we're gonna move to Washington, and we still try to do the real estate thing. We did join a mentor group and all that kind of thing. And I knew I did not want to do a bunch of single family houses because I don't want to deal with the headaches and all that. So we decided to try multifamily. We tried as limited partners first, just try it out. We thought too, it's too good to be true. Is it a Ponzi scheme? It's just too good to be true, right? But we put the money in, and and the returns are coming back, getting returns, and we started reading more and learning more, and we started doing more. And then my husband thought he would probably become like the syndicator, but he loves his job too much as a radiologist. He still works now 3 days a week, but his strong point is connecting with other physicians, other high net worth people who are super busy, like Travis mentioned, super busy, and they just don't know how to invest their money. Because when I met him, he was Mr. Mutual Fund, did not know how to invest his money at all for a radiologist. And I was dabbling in stocks and that kind of thing. But once you have kids, you can't really do that. And you realize, what? Passive income is the way to go. And then we had to think about it, if to replace my income, how many syndications would I have to do? How many houses? Why don't I want to do houses? And so we decided, we became a little more active. We're key principal and general partners on several deals. We invest in Phoenix and Houston, Texas. We invest a couple of places like Florida and in Georgia. But my thing is honestly, my husband really was a lead on everything at first. I was still doing my pharmacist job, but since we moved here with the pandemic, I'm licensed in Washington as a pharmacist. Have not worked though. So I'm doing real estate full time, and so I'm pivoting. And so I'm going to be doing the investor relations for our company. And so I want to reach out to just learn how to reach out to other people are interested in investing, limited partners and that kind of thing. So I love Travis. Travis is a great guy because he's full up. I'm a limited partner. That's what I want to do. He knows he's done the active, doesn't want to be. And so our avatar are really our high net worth professionals who have money, but really want to be placed in a place that's safe and with sponsors who know what they're doing. So
that's fantastic. Thank you.
I love your show. I like to see people from various backgrounds and doing like-minded people, right? It's
absolutely
great.
Yeah, we pride ourselves on having probably one of the most diverse meetups around. So it's really always super exciting to see all the faces and see everybody come from different parts of the country and the world. So thank you so much for sharing, Becky, and we look forward to getting to know you better and maybe even collaborating in the future. Joseph.
Well, Thank you for having me. Each
See you
time I
again.
come, thank you. It's good seeing you all.
Absolutely.
I love, this has got to be one of the best. I mean, it was so clear, it was so understandable, and I want this information because you all may not know I'm 73, but I know of children of mine that can use this information, and I can open a world to them that was not open to me. So that's why I think this is so valuable. I myself, I'm with one of the companies that help real estate investors and companies with essential services. We provide the electric, we provide internet, we do internet wiring. We have the essential services that if you reach out and contact me, our company's name is Centillion 2. And we're here to help the things that you do go easier and with a good price of providing services that can help your deals come together. I can be reached through Julius or Leslie for more information, and I would appreciate any business or support that we could get because we are an upstart company, but we are anxious to get rolling and let people know what we can do and the services we can provide. Thank you all so much for having me.
Absolutely. Thank you so much, Joseph. Please also drop your information in the chat and for anyone else who may be interested in contacting you.
Thank you.
Thank you so much, Joseph. I really appreciate you and your support. And it's always beautiful to see your face. I think those are all the people on the video. Right now on my screen, I have Shawana next. So Shawana, if you're available, just unmute yourself and just chat. And Aaron is next after that. Okay, it seems like Shawana is away from her phone. So Aaron Oliveira.
Hey guys, my name's Aaron. I'm a lot younger and a lot less successful than all you guys. I'm only 26 and I'm, like I said at the beginning, working for a fintech startup, but really have always wanted to get into real estate and kind of had an awakening moment last year where I realized it was never going to happen unless I was actively pursuing the knowledge. So just trying to join people like you guys and learn from you and get started on my first deals.
Well, you're on the right track, Aaron. And thank you so much.
I wish we did.
And you guys it started much earlier than the rest of us, so you're already one step ahead. So congrats on that realization, and we look forward to seeing you in future meetups.
I'll be here every month.
Fantastic. Han Duong. I'm sure I butchered your name, Han.
Hey, no, you're right. Hey, Julius. Hey, everyone. Thanks for having me. I really enjoyed this webinar. I'm new to the investing side as well. I was a former CPA, now turned full-time realtor and investor. So syndication multifamily is a new model for me. So I'm reading as much as I can and joining and listening to as many webinars as possible. So then that way I can invest in deals and maybe someday syndicate some deals myself, but primarily looking for passive income and learning the business.
Absolutely. I think the journey to growing your wealth starts with growing your mind. And I think you're doing it the right way. So we all went through that same evolution. You know, when I first, when Leslie was first introduced me to multifamily, I thought it was like a joke also. I couldn't believe that as savvy as I thought I was, I didn't know about this asset class. So but slowly but surely, I became a believer and now a complete evangelist for the asset class. So now I am on the mountaintop, just shouting to anyone who would listen to me about the benefits and the tremendous advantages of being a significant participant in this very special asset class. Marshall, thank you again, On. Marshall? I think Marshall may be away from his phone. Trevor, hey.
Hey, how's it going there? Can you hear me?
Yeah.
Excellent, excellent. I'm in here in the gym on the treadmill. First, thank you for putting this on tonight. Very, very informative. Myself, I'm based here in the DC, Baltimore area. I got started a few years ago and in the house hacking. I was a grad student at Morgan State, down over at Hopkins. And then I actually got started with house hacking. did 2 properties here, and then I just got 1 in Houston. But this was very informative because, you know, a lot of the problems that he spoke about, I'm sure many people on this call are familiar with. And I was like, okay, this makes sense. You know, the being a landlord, the hands-on investing has really started to be taxing after 3 years of doing it. So now I'm super excited to, you know, be an investor in some of these, you know, larger deals in LP. So thank you for this. I look forward to being part of your community, and yeah, and I'll be just staying attuned and hopefully investing in some deals. I'm looking at the one that you just dropped about Columbia, South Carolina, and I'll share that with my network as well.
Thank you so much, Trevor. It means a lot to us that you're here and that you are willing to share that with your network. We'll be more than happy to engage with whoever you need us to engage with, including yourself, to shed some more light on that particular deal, but just multifamily real estate in general. Again, thank you so much.
Thank you.
Yeah, John Rock.
Hey, can you hear me okay?
Yeah, definitely.
Yeah, cool, man. Yeah, just first time coming into the group here and just learning about this business. You know, I've placed, well, probably heavily into stock market and, you know, Bitcoin and things like that. But, you know, it's volatile, as you know. And so looking to kind of diversify a little bit more and learning about this business and, you know, just kind of coming into it in the last few weeks, actually. So brand new. Appreciate what you're doing.
That's fantastic, John. Thank you so much for those very kind words. If I may suggest, there are a few good books out there that you could check out too. One pretty decent book that it's pretty simple. You could probably read it within a day. Is Will Borrow Profit by Jake Stanziano and Gino Barbaro. If you want to check that out, that really kind of breaks down how this entire asset class works at the most basic level. So if you want to check that out, that would be a great place to start also. And the Best Ever website also has a pretty fantastic section for passive investors. We are more than happy to put that in the chat just in case you want to check that out too. So
just to add one other book, I think Travis pointed it out for any passive investor here is Hands of Investor by Brian Burke.
Yeah.
It's very comprehensive, very detailed. It's a very good book. I recommend it highly.
Yeah, and Self-Investor by Brian Burke. We could, Leslie, if you could just help us throw that in the chat too. It'll be awesome. Oh, actually, that's already done. I think Braden is already on top of it. Great. Well, Elena Keith, good to see you again, Elena. You want to just unmute and say something?
Hello, everyone. I'm right now in the lounge of the hotel and could be a little bit loud here.
No worries.
So, thank you so much for having a great group. And I've been investing in Arlington, Virginia area, in Alexandria, and I'm looking into expanding into Florida and California. And I've been in single family market so far, and I'm looking into moving into commercial and beyond. So it's a great group to be in and get to see what other people, what everyone else experienced, and just learn from others. So thank you so much for having us here.
That's beautiful. Thank you so much, Elena, and thanks for always being around and participating in this meetup. It's always good to see you and hear from you. Jay Miller, good to see you again.
I'm here. Thanks for calling everybody out, and I apologize for arriving a little late.
No worries.
I represent a Haven Partners Group. You guys are a great team of people. We have a GP and an LP position open, if not 2 GP positions open, for a scaling model, private performance-based fund. It's transparent because we base some active senior living up to about 20 units max, like between 10 to 20 per location, as well as the private boutique. They're called boutique hotels, but it's a private conference space where you can hold special events for whatever your special event is, up to about 30 units, maybe up to 50 units. They share the same properties on about 30 plus acres, maybe more depending on the area in mild climates. And we have a third model. It's 4 total models. I don't want to go into detail on all of them here, but it was validated. I say this in private groups. I don't put this in print anywhere, but it's been validated by Jay Abraham. So we're focusing on getting our LOIs for our key consultants and advisors so we can publish them on our pitch deck. And of course, people who are in the beginning, our limited partner and GPs, or our limited partner in particular, or limited partners or lead investors, I should say, they help to design the PPM being offered to the rest of the membership, which is capped at a certain number, but there's no limit on what can be raised. We are going to pause this stage at 20 million, and which means the investors who come in up to that point will still continue to get gains, but we might split it into 2 funds because there's high demand for these types of funds. And we're going to work on licenses for the models as well, which will be another income stream into the fund. So that's it in a nutshell. It's got some global reach. It's high margin impact projects, and it's very exciting. We're very happy about it. So thanks again for doing what you do and giving everyone a forum to share their information.
That's fantastic, Jay. It seems like you guys have a couple of unique models there. So please throw your information in the chat so that anyone who is interested can engage with them with your company, please. Aubrey Grimsley, and finally after that it will be Bobby. But Aubrey, I think Aubrey may be away from his or desk. So Dr. Bobby Ndu, if you're there, that's my very dear friend and brother. It was well on his way to becoming a super passive investor. Share something with us, Bobby.
Hi, everybody. My name is Bobby Ndu. I'm a former partner of Dr. Oni here, and I'm very much interested in passive real estate investment syndication deals. Someone mentioned Cardone earlier on the call. To be honest, that's how I got exposed to it, was just kind of one of his talks, and I got into one of the deals there. Yeah, it's been okay. But then I met up with Dr. Oni at a wedding, and I was gonna proselytize to him about a syndication deal and getting into real estate. My man turned to me and said, "Well, I am a syndicator." And so, yeah, from there it went. So I'm in on a deal here with XSITE, and I'm gonna start looking at this other deal that they got going and seeing if I can scratch together some powder to get in there. And I'm very much interested in diversifying and being a syndicated investor as much as possible, and eventually becoming a syndicator myself at some point to partner with Dr. Oni and the rest of the group there, if possible. But that's not for a few years.
The door is always open for you, brother. So thank you so much for always being a supporter of what we're doing, and always challenging us. Folks like Johannes, folks like you make us better on a daily basis. So folks like Marshall will continue to invest with us and challenge us. We really appreciate you all. Well, with that, I think we are coming up on time. It's once again, on behalf of the entire team at XSITE Capital, I want to say thank you from the bottom of our hearts. We know you could be anywhere else in the world, but 1 hour, 30 minutes later, you're still here with us. We don't take that for granted. We really appreciate you. We thank you, and we look forward to seeing you next month. Thank you, everyone. Have a fantastic night.
Night, everyone.
Yeah.